Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian own, nothing control everything. Just want to thank you for tuning in live or listening to replay. Very excited about the episode today. This is episode 157. If you own a stock, you own a company. And, this is always just wanting to bring the best to you. So, trust Christian own, nothing control everything. And we have our trading partner, Cornell, here with us on this amazing episode 157. And so, we just wanted to really dive into the subject matter. If you own a stock, you own a company. So many people think on a daily basis that if they just get a stock in a company, that all they wanted to do is go up in value. Well, we have someone on the line with us, Cornell, the trading partner, that talks about how even in a down market, that's probably a faster return. Could you talk about that, Cornell?
We're making money both ways, not just waiting on the price to go up. I prefer the price to go down because the market move fast. I get my money quick.
Okay. Just give a little bit more elaboration on when you say you're making it quicker or when the market's going down. So how are you able to make money? Would people call that short selling, or people say, they're saying, hey, what type of trading is that? Because most people only know about the stock appreciating and they don't think about owning the company when they own the stock. When you are selling, that doesn't mean you own it. Are you selling shares yourself? Could you explain?
Like I said, stocks, y'all buying an asset, holding on to it, hoping to go up. We trade contracts, and the government created what they call a futures market, where we predicting what's going to happen in the market. And that's pretty much where all the money is moving through, and the futures market. You got a $10 trillion forex platform moving from contracts. We ain't just got a dollar and a Canadian dollar in our hand trading it. No, we making a prediction. But that what moves the world. That what moves the market. So the difference is while y'all hold on the stock, I gonna go in and buy a contract. I actually can go against what y'all doing and still make money because I'm more interested in what will happen in the future. And the market reacts off past, what can we say? Off past events, but we still betting on the future. But to go back to that past event.
Okay. So you say you wanted to go back to past places. Okay. Now, so you saying selling. So selling, is that shorts or puts or whatever what is the term just called that? Selling?
You hit the sell button and take the trade.
So you take a trade and your trade's going down, not always going up.
Sometimes it's gonna be going down, sometimes it's gonna be going up. It
Okay.
doesn't
Okay, it doesn't matter. So that's a different type of trader than what most people know because they're
matter.
used to owning a stock,
They used
you
to
own
somebody
the company.
talking about stocks, bonds, and mutual funds.
Okay, so I just want to dive deep for the elaborate listener of how Cornell actually can trade the what is that called? Trade the actual bonds, the treasuries. You can actually trade the treasuries. Is that true?
You can trade everything.
You could trade everything: corn, sugar, pigs, uh, tobacco. They got different type of stock for everything. Okay, so everybody's going public now, huh? That's what it is. Everybody's going IPO. If you own the stock, you own the company. What happens when you're the majority shareholder? I know so many people that actually, or the vault has encountered, that literally they want to own the whole company. They have to own all of it. They don't want to give up portions and portions. We saw that on even some of the people that we saw on the show this weekend, that they didn't want to give up larger portions of their company, but didn't take a strategic partner because they were focused on owning a company. See, they wanted to own a majority share of stocks. They only wanted to let someone come in as an even minority partner, 10%. The biggest, I think, one of the worst deals we saw this weekend, Cornell, was when the lady didn't take the 200K for 20%.
Yeah.
And that to me was very disappointing because she took 10% for so much less, and it was just like, okay, you don't have the partners that you really need now because you were focused on owning the company. You didn't want someone to tell you how to do the product. He was there for only money. So it's interesting to see that if you own a stock, you own a company. How much of the company do you own in stock? So here it goes, private sector example. It goes from Microsoft Corporation to the Bill and Melinda Gates Foundation. That's private sector. Am I right, Cornell?
That's correct.
So his shares distributed to it is a tax exemption to something he's in control. That's simple. What do you think he would have paid? 30 million? He was already a billionaire. Remember, Cornell always says you don't want your name to be on Forbes list. Well, his name got up there. He started challenging some of the big dogs, and then he got what? Exposed, right, Cornell?
Get exposed quick on that list.
So he gets up on the list, and then he gets off the list. Is he not really there anymore, right?
I don't think so.
Nah, he did a disappearing act like some of the best of them do. So he didn't want to own a stock, and he doesn't want to own the company because he knows ownership is what? Liability. So if you own a stock, you're in a liable position. Cornell doesn't own the stock ever. That's the most interesting part about the so-called day trading. Oh, you're trading stock now. You're not waiting for it to go up, or you're only waiting for it to go up. What about all these apps and all these different things out here, Cornell? I heard about all these different apps, man. That I can trade through.
I
If,
don't know nothing about.
you
I
know,
hit. What's the one everybody be using now?
Robinhood,
Robinhood.
Acorn.
I don't use it.
Look, we me and Cornell come from a different background of mentorship. Something we always want to highlight on the vault. And
Why I like to trade, like what you said. Y'all gotta think about these stocks y'all buy. Don't necessarily mean that all stocks gonna go up. You investing in somebody else's business that you really have no control of. Me, or say I trade, I got control of what I'm doing. I can hit that buy, I can hit that sell, and I pretty much know what the market gonna be doing. So to me, the better investment is somebody can control. And it's just me, my platform. I got direct access to the stock market, well, all the market. I ain't gotta deal with nobody. I control my own money. It's a no brainer for me. I got out of yeah, you can invest in stock, but for us it's like a that's number six down the list type stuff. It
ah,
ain't that
perfectly said,
really
perfectly said.
the top of the list.
There's so many hidden jewels right now. But if you own a stock, you own the company. And when you're in a position of ownership, it's not liquid. How liquid if you're the owner and you got to keep reinvesting the money in the company? If you own a stock, you're reinvesting in the company. Why is Amazon doing corporate buybacks? Because the public people have bought so much stock and share, they said, well, hey, we should buy back our outstanding shares. So the CEOs are buying their outstanding shares back right now. It's called corporate buybacks. You all can look this up. It's going on right now in August, September. They did the largest corporate buyback in history. Amazon. Oh man, I think it was another company for sure. They call them the FANG companies: Facebook, Amazon, uh, what is that? Apple, corporate buybacks. And this is going on right now in the public. You can Google that within the past, couple of months here, and that's what's going on. So when we see, if you own the stock, you own the company. If they're doing corporate buybacks, why aren't you doing a corporate buyback? If you have a portion of the company, are you doing a corporate buyback? You want to know why most people can't? Because A, they don't have enough shares in to do a corporate buyback and at least buy some of their shares back at a higher rate. So since that's not the case, we're going to move on to the fact that if you own a stock, you own the company. Okay, well, Apple's doing the corporate buyback, and now you're left with the money, the principal, what they supposedly put up in order for the common public to even think that they could get in the market and say, hey, we want to get in the market with you. And we'll ride this up to 100, 200, 300, 300, 500. They went to 1,000. Apple stock went to what, close to $2,000. Amazon's close to 1,800. Okay, these are FANG once again. Facebook, I think theirs was like a 180. I don't know what their high was. I haven't seen Facebook's high. Y'all can look at Facebook's high. We got so many traders that listen now, so it's always good to see so many. Actually, this weekend, Cornell has a webinar. That is this the? Wow, I don't even know what day.
7 and 8.
Seventh and eighth. I was close. Yeah, we're at seventh and eighth, and so Cornell's doing a webinar, seventh and eighth this weekend. $300 is no hidden agenda. The man doesn't come at it that way. So his is out there. $300 this weekend webinar with Cornell. Christian at Trust Christian will forward you over to Cornell, get you guys rolling if you guys are going to be rolling with Cornell. We had so many traders listen and come through, and it's just cool, honestly, to see so many people learning. Quite a few trustees, we'll say that much, as a trustee, Cornell trustee status. So when it comes to being a trustee, okay, there's a correct position and an incorrect position. I mean, when you look across the board, all hedge fund managers are in trust. All your mutual fund managers are in trust. All your pension fund managers are in trust. So for all you all to think you're getting a pension from whatever company you think you're going to get it from, pensions are managed by a hedge fund manager or a fund manager. These guys are in trust. They don't want to be held liable for your money. There's rules. What do they call them? FDIC rules. They don't want to be held liable for your money. Well, on the private side, it's in trust, of course. On the public side, it's a mixture of public entities and trust. So when you own the stock, you own the company. I mean, is that not true, Cornell? If you own the stock, you own the company. It's like saying, or Cornell said it perfectly in the beginning. He said, well, you own an asset. Okay, wow, we got an asset. It's kind of appreciating, it's kind of depreciating. Okay, it's sort of like the house that we want to go live in. Cornell, that is the funniest thing. The house, the bills. You own the stock, you own the company. You want to say anything about your trading webinar this weekend? 7th and 8th? Maybe the hours so people can be prepared.
Yeah, so don't start at 5 p.m. Central Standard Time. We say 7:30, but you know how many traders on there, and it be people coming back taking it over and over again, so they have questions. Might run a little bit longer, but learn a little bit. Might even give it a little general conversation at the end about some business, but
Wow.
it, it it's picking up steam, and a lot of people. I see that a lot of people actually get it. People already making money. Like they ain't bragging about what they make, but yeah, people are making money. People are taking this actual class, this weekend class, and making some money off of it. It's just straightforward to the point. Cause like I said, who knows how much longer Cornell gonna be doing those classes? I do them by demand. So
I think I would almost be safe to say that you almost are up to 20 hours or more of content with that on the webinars, which is like that's pretty good to me. I feel like okay, that's like you go in college course status, man. Like people put that content in their mindset. It's a whole nother thought process. You know, you get bombarded with it. I remember, you know,
no detail. So for beginners, matter of fact, I actually got added a section that was talking about the difference between stocks, forex, the other markets. I actually added that in there now that I'm thinking about it. It's a little bit more detail for the beginners, but it's always something new because guess what? Got people come on and ask good questions. So I allow some of the other traders that already prior to this to come on there and ask them questions. So it's kind of different every time. The information the same, that the Q and A it be different, but it's everything you're gonna need. You gotta go look on the internet. It's gonna be all you're gonna need.
I really want to sit here and think about what would be one of the most quintessential indicators that you use. Okay, I actually know what it is. Haha, I know what it is. So for all the traders that have gone through the course before, Cornell said the only thing he would need on the screen would be the 200. Am I correct?
Yeah, pretty much.
All right, cool. All right, see, I'm learning that. I gave all of you all the gems that he gives me in the private. When we talk, he said that, and I've never forgot it. So it's the 200, you know, and it's so funny because we could talk about how some people were in the chat privately the other day, and they were talking about other things. But see, ladies and gentlemen, me and Cornell come from mentorship. We come from KISS, keep it simple. You know what I mean? And so when he says all I would need is that, we're not varying outside of that. And it's interesting because we hear the mentorship progress to where people say they don't need any indicators because indicators have a lag. And this is something that all the elite traders supposed to know, correct, Cornell? They supposed to know that the indicators got a lag because there's 2,000 of them, right? It's 2,000 indicators and they all got a lag, right?
Don't lag. They built to lag.
Okay, so they built the lag. So now that means that whatever I'm looking to analyze the market has a lag. Okay, okay, okay. So you said only, okay, we're not going to go back to that point. That jewel's already been dropped. So you don't want to own the stock, Cornell?
Not really. It's real at to me. Like we talking about, it's real assets compared to. I put it like I said, stocks is down my list. Do I have stocks? Do I have crypto? Yes, but am I looking at them? Am I worried about them? No. Did I put some money in it that I really needed? No. So when they fail, they fail. To me, that ain't solid. They're just hoping that the company work out. I don't take them type of investment. Trading, I control my money. But I did like with your 401k. You guys are paying somebody monthly. You really don't even know it. But daily to whoever charging you monthly, whether you make money or not. Then at the same time, they're gonna charge you extra for taking it out before time. While Cornell sitting over here in the correct position and seeing all his money. No restriction. Don't have to call and ask nobody for my money or ask me how much I can get. No restriction. So owning the stock ain't that important to me. I want real assets generating real wealth. But like I said, don't get me wrong. I will buy stocks, but like I said, it's down the list. It's spare money. Like, oh, see, I made some extra money. Oh, that sounds good. I just throw something in there just in case it do pop off. That type of investment. That's how I look at stock. Now I can trade stock. and pick stock, but I prefer to trade it than buying it.
Right, two different positions. And
I
trading is what people are not doing. They're buying, but they're not trading.
I can show you how to look at a stock if you want to buy stock. That's what I do in the class because the same thing they charge you, and this is the power in this class y'all don't get. I can charge way more than what I do. It ain't about the money. Like you said, we don't do stuff about the money. What I'm showing you, I put it like this. If you look it up, and a lot of y'all listen, go look up futures market. Go look up forex. Go look up stock. Go look up binary options. There's four different things. Somebody's gonna charge you to teach you each one of them. I'm gonna show you a way that ain't on the internet. You can do all of them the same way because we doing what the people that control all those markets is doing. And it don't get no simpler than that. Cause you can go on the internet, they can get you for your money for each one of them categories I did name. And you'll pay a lot of money and still want to learn nothing.
Because the indicators, there's so many of them. You learn the indicators when you're on the internet. You learn someone is teaching indicators. That's what they're teaching.
That's what they teach you.
Indicators. Oh, we got this one thing. This what me and Cornell been in the business. I've been in the business for about 3 or 4 years now, and we done seen the indicators come and go. Oh, we got this harmonic scanner. Oh, we got this AI. It's like we hear all of this, and it's just like, okay. So the banks are controlling the market, and none of them are talking about the banks. Okay, we were already talking about private banking. We know which direction we're moving in. We're moving in the right direction. Private banking. That was it. It's been private banking. But it's even more private banking now that we know that it's international with the trading. Cornell knows that.
That's it.
If you want.
Like
Man.
think outside the box, like they put what they want you to see on TV, and then I was sitting there laughing at Trump. Trump didn't want y'all to see the route of the storm. Like I did a prison 3 months ago, he was trying to take some money out of the relief fund. Now a storm coming through. Oh, he trying to cover that up because he wanted to use that money for some other thing. Him on TV trying to hide the path of the storm. Like I keep sitting here waiting on people to guide y'all. If you got that learning yourself, getting in them environments and learning yourself and taking charge. Like, we moving to the next phase. Y'all gonna see it. What it keep to you gonna see the progression that we make. You can be making also while we making the progression. And guess what? I'm not gonna call you. Christian ain't gonna call you. I ain't gonna make you sign up. I ain't gonna like even with the trade class. If you don't follow with me on the trade class and have questions, I'm not calling you to see if you get it or not. That's how my mentor put it to me. It's got to be something that you want to do. I'm not gonna call a person and get off the webinar, don't look at it again for 4 weeks, or I don't hear nothing from them. Most people gonna have questions that's really trying to get it. I'm expecting them questions. Then on top of that, now you got some other students that got it pretty good.
What happened to the aggression, Cornell?
I,
I don't know. You do you see me and oh my gosh, me and Cornell literally just got off the plane and just said, okay, let's go ahead and share some of the stories that's going on. We just got off the plane. and I just what happened to the hunger, man? The asking you, the person that's the so-called expert in that field, the guy that you listen to, and is he available? $300 Cornell is this weekend. That's for Cornell's price right now. Uh, And I think that that is we actually heard a trustee say this week, said, "Oh yeah, I've taken the course 3 times already." I'm like, "Wow, okay, you going again?" They like, "Yeah." I'm like, "Okay, so that means you're investing in a business. What, couple $1,200? $1,200? What's that?" The mentor spent 70,000 to get the information, 30,000 to get the information. He's 1,700. Is it seven? No, what is it like? What is it? 1,200? 1,200. Three, 9. Wow, less than 12. He's gonna do the 12. It's like, come on, man. Oh man, this is how you know this trustee's dedicated to the game. They said, "Oh yeah, the computer that I had, it wasn't compatible for the trading, so I had to go out and get one that was compatible for the trade." All right, well, that's another investment. Do we hear the investment put in? Not just time, the actual money, the so-called snacks, and who knows whatever else people are spending money on nowadays. You know. So when you own a stock, you own a company. Here we go. Here's a good one. Here's a good one. That's how I know we're in good position. So Bill Gates is coming across the border from Canada into the US with the floppy disk of Microsoft. What is it? Moz Dawes. It was something like Dawes, wasn't it? Was he Dawes?
Yeah, I think it was done.
I think he was Dawes because he had the other guy with him. It wasn't him by himself anyways. It was him and a few other people as well. So he comes across the border with the floppy disk. They say, "What is that?" The border control says, "What is that?" He says, "Oh no, just $1 billion, you know, idea." And they laughed, gave him his passport, and he got across and got back in the States. He's a billionaire. So I uh, coming through today, and then they say, "What is this metal?" And I say, "It's just a metal." Cordell, you know what I'm talking about?
Say what?
When I was coming through the airport today, they asked me what was the metal. I said it's a metal, and I think it got kicked out for that reason because of the metal. I was like, oh man, this is interesting. But ladies and gentlemen, when you carry assets on you, your things might get kicked out a lot. I guess Cornell's going through clear, so he don't have to think about walking through the other way. But nevertheless, that was a stock. It's not liquid. It's like me walking around as a company right now. Right now, holding assets on you is you becoming a company. Because now you have assets that are valued on the stock market: gold, silver, platinum, palladium, rhodium, precious metals, diamonds. These are things that, yes, they might get you kicked out of line. Like, why? Because you own a stock. And guess what? You got a stock that's worth $1 billion on you. You have a stock that's worth $100,000 on you. It's interesting. So, Curtis, do you think the watches that we seen earlier? Do you think they'll hold the value at which they paid for it? The UR one.
Yeah, 'cause they ain't gonna make that money.
All right, cool. So basically, the watch you gonna get it for $92,000, and then from that point forward, it's not going to depreciate, which is perfect. It's not going to depreciate. That's a stock in a company. Like you said, they only make a few. You bought a collector's item. It's a stock in a company. The watch is worth 92,000. Okay, now it's not going to depreciate. Cool. Now it's going to go up. We got a part of their company. But when are we going to sell this? It's only a few of these things. So we're really not in the business of selling. But this is called the rainy day fund. When people talk about a rainy day fund, your rainy day fund is not supposed to fluctuate with the market. That's called working capital. Working capital is not savings. Savings doesn't depreciate. Gold doesn't depreciate. Cornell, can you agree with me, or are you going to try to give me some trade and talk? Because gold's not going to go to zero.
Nah, gold ain't going to
All right, cool. So since we know gold's not going to zero, we know we have a thing that's not going to depreciate past what's considered a dollar.
And that's why it's called an asset. It's because it has value above the zero line. See, dollars are based off of zero and up. When you own the stock, you own the company. Why do you think the greats say they don't buy the stocks? What do you think Warren Buffett's buying? He's buying the company. He's ripping out management and he's taking over. He's buying the company. He doesn't need to own stock. He issues stock and then he does corporate buybacks. Warren Buffett is probably one of the best in the world at ever doing corporate buybacks. But I'm sure there's others. Warren's public. We can go to Ray Dalio. Ray Dalio actually has what's considered a private hedge fund because he keeps his right under a certain amount. Now, do you think Ray Dalio is issuing stock from his hedge fund, Cornell? Do you think he owns the company? All right. But he's managing $200 billion. So that's why he doesn't own the stock. Do you see? If you don't own the company, then you probably won't own the stock. But he is the founder of Bridge, whatever the name of his company is. You all can look him up. He's a great investor. We like, just the conversation. He's kind of had a different view on some. We're not promoting him in any political sense. We're just talking about the investor mindset. Just be very aware. People come with multiple facets. When we speak about people, we're talking about just in traditionally an investor mindset. Purely, even Warren Buffett, investor mindset. The way he looks at the company, the way he's going in, he's getting rid of management and he's bringing in his own management team. He has a system. We can even go to here's another great right now, Robert Smith, who just gave the 40 million to Morehouse. He literally has a management system that comes in and takes over a software company. So he doesn't own the stock, he doesn't own the company, but he's the manager of the company that's buying out the company. Software guy. Software is booming right now. Software, everybody knows software. Everybody wants to do the app, but they're not doing software. The actual digitization of the code. He's into coding. His foundation gives out money for people that participate in STEMs and coding. He has coding out there on the West Coast. Yeah, it's a great time right now to be in the market. We don't see a downturn. We love talking about it because it's funny, because we see everybody get ready to panic. Oh, who knows when the recession is going to hit? Cornell and us ain't thinking about no recession. What are we talking about here? Like, we've been eating when it was cold, when it was hot, when it was a little chilly. We've been eating. And everybody, if you've been eating, then you got to keep eating. And it's time to set bigger goals, get around different groups, grow assets, grow mentality, grow education, and grow. And that comes from consistent challenges, consistent pushing. Cornell and I talk about that all the time. Pushing ourselves. Even doing this episode right now. Just wanting to say, hey, let's talk about this subject. If you own a stock, you own a company. So many people are in the market. It's so interesting to see how many listeners are in the market and we're not in the market. That's interesting. I'm in the market, man. What do you mean? The major funds aren't even in the market most of the time right now. They're in private equities. We just talked about these guys. Robert Smith is in private software. He's into software. He's going private. He's private. Owning public companies when these public companies are doing corporate buybacks. And they're going to keep doing it. Cornell is happy about it because he's going to trade with the market. We're going to trade with the market. But what happens to the person that just has their money sitting there and parked there? And here we go. Here's another gem. Cornell said, the trading is zero sum game. I said, that sounds real good. I don't know exactly what it means, but it sounds real good. It sounds real good. I'm sitting there thinking, like, it sounds so good. Like, tell me again. Can you explain for the audience what zero sum game means?
be on the right side of that. And the ones that letting people guide them in the public with the stocks and all that, that's how you get set up to lose your money. Cause financial advisor gonna tell you, oh, that mutual fund gonna pan back out in like 5 to 10 years, it'll catch back up. And they didn't use your money for 5 to 10 years to make them a lot of money. Because they gain so big, they pretty much to put your money to the side for 10 years. They're gonna use your money for 10 years, paying it over and over again. Make millions and millions off of it. I'm like, you gonna get in 10 years is that 10% gain off the mutual fund. I don't need to laugh, but that's what's going on. So think about it. Your 401k is affected highly by the news. A lot of people lost money last year. 401k. Started the year all for 50, probably wind up with 30. We ain't doing it, and we playing it both ways. But in the superior information, in the right environment.
Think about it, so many times in your life that you didn't gamble the $300 on yourself or didn't put up for yourself, and it's interesting to see how many people may or may not do it. But for the ones that have, we salute you all. We appreciate you all because we understand that's called that leap of faith, and that's what it is. But once you put yourself in position, we got so many people that listen, and it's just like, okay, make it a point to invest in yourself so you can learn why you don't need a harmonic scanner and some ECC 11. Because we talked about this in the show already. Every indicator has a lag. The market's trading live right in front of you. It go up, it go down, correct? Live.
And here's the thing about it. So you can use them, but you're gonna be stuck at your computer all day. Like I can choose how I want to trade. Chris know that. I can let it run for a month. I can pay it every day. I can let it run for a week. I can make that decision. Still have to find out down and the strategies that people showing you. What they're not showing you is that you're going to have to take every single trade that comes through there that is given. Meaning, Christian will have to be up around the clock, taking trades. Your harmonic scanner or whatever gonna go off whenever it's doing it in. But here's the problem, and this is why y'all don't make money. I'm gonna tell y'all why y'all didn't make money if you did try them things. You pick and choose trade. Guess what? Those indicators lag, so they lose a lot. So the winning percentage may be 70, 80%. Guess what? You might have caught the 20% trade because you didn't put all of them in. That's why that don't work. I don't have time for that. I'd rather go learn what I done learned, look at it and tell you what it's gonna do a month from now. Tell you where it's gonna go. It don't need to indicate. And take the trade and make way more money than you was gonna make with that indicator. Cause all they doing is showing you a quick trick, probably to get in and out real fast. That's the difference. You're not doing nothing.
All right. Yeah. Well, yeah, I'm still here. I can hear you. We should be here. Appreciate you all for coming through, listening. Uh, we appreciate you all for tuning in, listening live, or in the replay as well. If you want a stock, you want a company. This is something that's been on our mind for a couple minutes, so we just wanted to share that with you all. These are the conversations that we have because we don't really own stock. That's a good thing. Well, I don't want to own a stock. You know what I mean? I don't. Cornell is not the next man either to stand in line and say he wants to own this stock. And that's the mentality that we have because it's own nothing, control everything. So what's the benefit? It puts you in a position of a beneficiary. It puts you in a position of a stockholder. When you own a company, if you go in a position of a stockholder. How many people are in position of stockholders? A lot of people are in position of stockholders. Would you agree, Cornell?
A lot of people what?
Position of being a stockholder.
They in a position or not in a position?
No, no, most people are in a position of being a stockholder in the company. You hear people, oh, I'm buying into the company. I'm buying more stock.
Yeah, everybody lets you do that. You can go buy a piece of Nike now. You go buy where's Nike stock? I guess you want to say, hey, I own a part of Nike, but what's the benefit in being on the board? The board is who's making the money.
Wow.
The board is who's getting a dividend.
Right.
If they ain't get no dividend, like you said, we buy back. It's called a buyback. Then I'm gonna make you lose some money. Then I'm gonna buy it from you at a cheaper price because you don't want to get out of it. Then I'm gonna take it back up and get my dividend. I know the rules of the game.
That's all it is. Well, we appreciate you for tuning in live or listening on the replay, Cornell. This has been a great episode for us to kind of go over some of the details about the webinar you're going to have this weekend and all that good stuff. So, 7th and 8th, definitely Christian at Trust Christian. We're going to forward you over. Obviously, it's a few days before it, so not a lot of notice, just kind of last minute because this is request. He has a demand privately that's big enough to say,
Don't
hey,
do
look,
it.
you know,
Go ahead and do it, and please don't email at the last minute on Saturday trying to get in. So if you need an invoice, get with Chris and I get the invoice sent over to you. Don't wait till the last minute. 'Cause I like to send the link out a little bit early, and I had to wait on people because somebody decided to call me 30 minutes before it's gonna start.
all right. Well, we won't let that happen. Christian at trustchristian.com. We'll get you over to Cornell and his team. If you own a stock, you own the company, and that's called a shareholder. That's not a board member. You don't make board decisions. You go to the what do they call it? The quarterly company earnings report. You get second tier stock, not first tier. That's second tier stock. Most people don't even know that that's class B or preferred. Which one are they? Common or preferred? Probably think they're common. Common stock. Most people don't even know that if they own stock that is probably called common stock instead of preferred stock. But hey, that happened. That comes along when you learn more. And when you learn more, that comes from investing in your education. And Cornell will probably give out a good one this weekend. There's quite a few people listening right now that could verify that for sure.
Yeah, it's gonna be a little bit more like the detail because I'm putting the class together for the kids for the first of the year. So I actually been going through dissecting, breaking it on down. To be honest, well, eventually I'm probably make a course out of it.
Yeah. And it's going on. It's going on. If you guys got any questions, feel free to type into the chat. We appreciate you all for tuning in live on the chat. We all see you all in the chat. And it's just been a great episode. If you own a stock, you own the company. What's the advantage of owning a company? Nowadays, when the greats are calling themselves founders and CEOs, they're not even calling themselves owners. Or Google now, when you go look at their stock, it's owned by supposedly Alphabet A. It's not even Google anymore in the ticker.
Yeah, and I've been googling a long time.
Yeah, that's called going private in front of your eyes. The company's owned by the big boy company that's really public on the market. that has multiple companies. Appreciate you all for tuning in live or listening to replay. I never can stop saying that because, if you go a minute past what we talk about, it's always great. If you have any real trading questions, enroll in a trading class. I would recommend you all to do that because it's worth what people would consider the investment. And that's just coming from, you know, being around this guy. The first day I met him when he said you could make $2,000 a day, I was like, man, that would pay for a good lunch right there. That's a good lunch. That's a good dinner. That's a good lunch. It's a good lunch, man. And I said, okay. And I met him at lunchtime. So it was one of those things. I was like, man, this is definitely something, someone to keep in touch with. And it's so funny how we did it. And that's because I think we both humbly met each other. It wasn't a, oh, I overlook you or you overlook me. It was a mutual meeting. And I just think that when you think about the guys in the market actually, you always see them team up with a buddy and they do business together and they do quite a bit of business together, and it's because they're in trust together. And these other guys out there, they're all in trust together. Warren and Bill are in trust together. You know what I mean? These guys are in trust with many guys, and it's just wow. Okay. And it's not that you wait your turn. You found someone that you can get aggressive in the acquisition of assets, in the management of assets. You have to be aggressive even in the management of assets. There should be a ferociousness in entrepreneurship towards the growth and development of the business. We see this is the bottom line in 2019, right here in September 2019. People are treating their businesses like it's a job. Oh, I'm just trying to make the same amount of money I made last month. That is not business. That's a job. Every time. It has to be exponential growth. If it's not exponential growth, it's not business. That's a stock. Oh, how can you? That means that you're worth the same amount of money in the output of the business every single month. That means nothing is getting done for it to be new, for it to be innovative. Nothing. There's not more time going into the business. There's less efficiency going into the business. You've actually maybe not become more efficient. As an entrepreneur, you're CEO level. At entrepreneur level, you're looking down at, oh wow, who's doing this for me? Who's doing that for me? The accountant, are they doing their job for me? We can go into a complete diatribe about entrepreneurs and their relationship with accountants. And then we can go into the same diatribe with lawyers, and the same diatribe with employees, and the same diatribe with many other people in the environment of business. But specifically, the CEO having the 30,000 view from above. And when Cornell says, hey man, you gotta get around people that push you, that is the mindset for us right now. Because the wealth is here, ladies and gentlemen. If you're living in the States, you're living in a great position. No doubt about it. Whether it's this $300 investment right here, or what? A $1,500 investment for what? The training? Come on. The airplane flights nowadays will cost you that. And we see so many people that I guess Cornell says is people want it over the internet, but that's not supposed to happen. So it's just 2019, ladies and gentlemen. We see we're moving. The movement is interesting because as you move, you start seeing some of the same people. You make it a point to see the same people. When you're traveling, and it's just amazing right now to have the fourth quarter. This is the fourth quarter of the business year, and here we go. We just came out of August. They put the brakes on. Now we're going to what? We're going to September. Who's sleep behind the wheel right now? Who's got their foot on the throttle? Who's putting in work every day, becoming more efficient, becoming better? All the things that you did wrong, maybe the first 2 or 3 quarters this year, they're gonna pay off in the fourth quarter. The fourth quarter is where we make our money, right, Cornell? Ain't that what Kawhi Leonard say?
Yep, everybody take off in the fourth, but my year just started.
Oh wow, did you say that? All right, I'm getting off now. That's where we're getting off. You got to do the webinar this weekend. My year's just starting out. See, when he starts talking like that, ladies and gentlemen, that means you got to get busy, because this is where the banks, if he's getting busy, the banks are getting busy. I need to get off right now myself. The Vault, peace, Christian at Trust Christian.